So can you tell us a little bit about a case study last year where you did a reorganization for a client?
We had to be very creative. So, for example, essentially capital gain was more of an issue for a client that owned a real estate, that a real estate transaction was happening, for example, in July, and then all of a sudden we have to rush it for June. But then again, a real estate transaction it's like a whole process involving so many different persons and parties. So sometimes it's not up to the parties to be able to rush the transaction. So for example, the most important part of a transaction is financing. And when you're dealing with banks, you don't have control over them. So a lot of the transactions that were supposed to happen in July, we try to rush them to close in June, which was not possible for our purpose. So what we had to do is essentially different strategies, but one of them is essentially selling at fair market value to a related entity with a full balance of sale, but without rocking the real transaction that doesn't happen. So we had to use like a strategy of simulation. So essentially it was an off-title transaction, so not registered, not disclosed to the eventual buyer, not to rock the boat, and not to the current lender. And we had to deal with Revenue Quebec and Revenue Canada and the city to avoid triggering welcome tax and capital gain tax, which even if we had to trigger it, depending on the case, would have come to the same objective because the tax
Would have been due.
Exactly.